Kick off. Good evening, everyone, and welcome. My name is Heather Nickerson, co-founder and CEO of Artifacts. I'm joined tonight with my fellow co-founder, Ellen Goodwin, along with Lisa Gellis and Lee McWhirter from Howard Insurance. We are thrilled to bring to you a discussion tonight on insurance and stuff. As you all know, it's always top of mind. We all have a lot of stuff. What do we do with it? And tonight, more importantly, how do we ensure it's protected? So it's our pleasure to welcome again Lisa Gellis and Lee McWhirter with Howard Insurance. They'll be giving us a really in-depth presentation on essentially how do you protect your stuff and how do you make sure it's adequately protected. We're going to turn it over to them for the presentation. We do, if you have questions we go through, feel free to pop them into chat. We will try to answer them at the end, but if there is a burning issue, a burning question that just can't wait, feel free to pop it in. We'll take it as it comes as well. So with that, over to Lisa and Lee. Welcome tonight for Evenings with Artifacts.
Thanks, Heather and Ellen. We're so excited to be here and just really appreciate the opportunity to spend some time with you and the folks out there. So I'll start kind of with a 30,000-foot overview of our firm as a collective, and then kind of zoom into who Lee and I are specifically. So Howard Insurance has been in business for almost 80 years. Lee and I don't date back quite that long. We are an independent insurance broker. Insurance and risk management is at the core of what we do. It's all we do. We don't have any assets under management, for example. We are agnostic when it comes to carrier selection, but that said, we are fortunate enough to partner with and represent all of the top insurance carriers in the industry, including names that are probably familiar to you like Chubb, AIG, Pure, and W.R. Berkley Company. We have a private client division where Lee and I spend most of our time, so working with individuals and families on their insurance. We also have a commercial insurance arm insuring businesses. We have a real estate division for our clients with large and diverse portfolios of real estate. And we also have a life insurance practice as well. In terms of myself, as every young girl does dream of becoming an insurance broker growing up, not really. I originally thought I was going to have a very different career path in management consulting. The kind of economic circumstances when I was coming out of college dictated that I make a pivot and find something else to do. It ultimately came down to a connection I made. I met a woman who was a recruiter for an insurance company, and she was young and fashionable and hip and fabulous, all the things I like to think I also was at that time. And she convinced me to give insurance a try. So I thought, I'll do it for a couple of years, see what happens. Here I am, multiple decades later, still going strong. So I've had the good fortune of working across various facets of the industry, working for insurance carriers, being a broker, and the reinsurance space as well. On a personal note, I am a lover of golf and dogs. I have an almost 5-year-old Rottweiler named Rex, who is 130 pounds of joy. Someday I will find a way to combine my passions of golf and dogs in a meaningful way. And with that, I will turn it over to Lee to let her introduce her.
Awesome. Thank you, Lisa. So much like Lisa, I dreamed of the glamorous insurance life. And that's how I got started. Just kidding. So my background before insurance is in fine art. So the topic that we're discussing today is near and dear to my heart. But once I realized that my art wasn't going to save the world, I shifted gears into the insurance industry. And now I use my creativity to provide innovative solutions for families, individuals that have really complex insurance risks, and it has really blossomed into a tremendous career for me. In my spare time, I have a 1-year-old and a 3-year-old. So what little spare time I do have, my husband and I spend renovating our old farmhouse. And we are in the midst of living in a kitchen renovation, and we are living in it. So we are crazy. But it's been a wild ride and really love it. So thank you. I am going to share my screen now so that we can kick off our presentation.
Just want to give another shout out to the title, Love Insurance and Stuff. It's perfect.
We were all talking about that for this evening, is how much we may be a little geeky around both insurance and stuff, but the two really do go so well together. So we hope we enjoy the next 20-30 minutes going through the presentation.
Love it. Perfect. So in terms of where we're headed this evening, we'll start by why are we here, talking about why it's important to insure valuable items. And when we talk about insurance in this context, it's a specialized policy or rider designed specifically for whatever you may collect, whether that's jewelry, fine art, wine, sneakers, sports memorabilia. With few exceptions, anything that you collect can be insured. We'll run through a fact and fiction round. There are some really common misconceptions around insurance as it relates to insuring valuable items and collections. Talk about some best practices to protect those treasured items. We'll go through some infamous and more famous claim and loss stories, and then we'll round it out with some open discussion and questions. So to just kick it off and talk about those two items pictured on the right, and full disclosure, we do not insure these items, but thought that they were interesting enough to draw attention to. The work at the top is by an artist named Dan Colin. He is a contemporary artist who works in some alternative and what I would call non-traditional mediums, including trash and bubblegum. Bird droppings as well. So this particular piece of work is comprised of chewed bubble gum. So Dan and his gallery assistants are literally chewing different flavors and types of gum, affixing it to a canvas, and this is the result. So as you can imagine, with any kind of biodegradable materials, there is somewhat of an inherent vice from an insurance perspective. When it interacts with sunlight, the sugars are activated. There can be issues with insects and so on and so forth. So not an ideal item to insure in that regard. Switching gears, those beautiful shoes in the bottom are a pair of Nike Air Force Ones designed by Virgil Abloh, who was a late creative director at Louis Vuitton. And Virgil designed about 200 pairs of these sneakers. Only one pair of size 5 are in existence, those pictured here. They sold at auction last year for $350,000. So we continue to see a tremendous uptick in interest in sneakers. Sotheby's now has their own dedicated sneaker department and sports memorabilia. We could have a whole presentation just about that, but I will leave it there, and let's talk about why it makes sense to insure valuable items. So a typical homeowner's policy is really designed to primarily protect your home, the structure itself, your personal liability, and some general contents, such as the towels, as I like to say. So if you rely solely on your homeowner's insurance to replace your collections or your valuable items, it could mean paying significant amount out of pocket. So the typical homeowner's insurance policy has a deductible, usually $2,500, $5,000. We have clients that are more risk tolerant, that they will have deductibles $25,000 or $50,000. That is the amount you're responsible to pay out of pocket before your policy responds. So one of the advantages to get a separate policy for your valuable items is there is no deductible. So you will have coverage from the first dollar. It's also on an all risk basis, meaning as long as the coverage is not excluded, it is included. So the coverage applies for causes of loss not commonly covered by other types of insurance, such as flood. So caring for a unique collection, as I'm sure a lot of the collectors out there know, can be complicated. We do this for a living, and sometimes we need help and need expert advice on hand. So the carriers we work with provide consultative services to our collectors, which can include everything from visiting your home or office to do a risk management assessment, guidance on storage or how to display your items. They can also share information about fire protection and storage information. We also have a whole network of professionals that we work with, everyone from appraisers to transportation specialists that we can refer you to when needed for these important collections. And it's so important to find a policy that's going to cover misplaced, lost, or stolen items. So many people don't realize that homeowners insurance policies severely limit coverage for items which are misplaced, lost, or stolen. In some cases, for things like jewelry, there can only be maybe 1,000 or 2,500 in the policy for those types of items. So it's so important to make sure adequate coverage limits are in place. And lastly, many homeowners policies exclude breakage for fragile items like crystal and china. Having moved many times in the past and having my crystal and china broken in transit on several occasions, I can attest that this is a type of loss that happens all the time. And with that, I think we will flip to our lightning fact or fiction round.
All right, I have been called in to assist with this portion. We're going to go through 10 questions, fact or fiction. You can follow along at home and take note of what you think is fact or fiction. And then Lisa and Lee will let us know what is truly fact or fiction. So here we go. Number one, I need an appraisal to insure an item separate from my homeowner's policy.
That is fiction. So in general, appraisals are only needed for higher valued items. So most of the carriers that we represent will only require an appraisal when the item exceeds around $50,000. And some of our carriers, they don't need an appraisal until that item is at $100,000. So you can create your own schedule and then you can submit that to your insurance carrier and they can update that and schedule those items separately. We always recommend scheduling items and using an appraisal to schedule items when those items are modern art or other art that you are seeing really big increases in the market so that you can ensure that that stays insured to value. Most valuables policies provide really generous additional coverage. So you have a scheduled limit and then they provide 125% of that limit if there is a claim payout, but it's always in your best interest to have an appraisal on hand for those higher valued items, especially things like art that can really skyrocket in value in just a short amount of time. I think some recent examples are women of color, indigenous people. Those artists are seeing a huge increase in popularity, and as a result, their works and the cost of their works at auction are skyrocketing. And so it's important to maintain those appraisals so that you can prove to the carrier that value, but then it's also important to have that relationship with an appraiser so you can continue to have that value updated.
Hi, Lee. We have a related question for you that I will interject with.
Oh, great.
Fact
Okay.
and fiction, but we can keep it really brief.
Okay.
And you actually just hit on it. What if the item and the appraisal don't meet what I expect? Because to replace the item requires reaching out to the same artist to recreate the same piece, and it might not be possible.
That is a really great question. So in most cases with the carriers that they represent, they will work with both the insured and they can work either directly with their artists or risk managers to determine what the most appropriate value for that item would be. And you can do one of two things. You could take the item that they determine what the value would be to replace it, even if that artist isn't willing to replace it, or you could just continue to work with the artist and negotiate with the insurance company to find an appropriate price to pay them. So you always have options, and I think the importance is having the coverage there to respond, because if you're not covering it appropriately, then you won't have the coverage to begin with. I hope that answers it quickly.
That's great. Thank you, Lee. Number two, fact or fiction. My homeowner's policy will pay to replace items even if my jewelry, antiques, silver, or fine art has appreciated in value.
That is most certainly fiction. As Lee said, another advantage of the specialized coverage is that additional 25 to 50% buffer if an item has appreciated in value. And I think it's also important to distinguish between replacement cost versus actual cash value loss settlement. And not to get too far in the weeds on insurance verbiage, but replacement cost is always, always, always what you want to look for in a policy, which means new for old. So if you have a sofa that was purchased 10 years ago, a policy written for actual cash value is going to depreciate that couch over 10 years. So you will get the price of the couch minus 10 years of depreciation. Replacement cost is going to pay you for the cost in today's dollars to replace that sofa. So that's why whenever you're looking at a policy or talking about coverage, replacement cost is what to look for versus actual cash value.
Excellent. Thank you, Lisa. Number 3, fact or fiction. All homeowners policies are the same and include coverage for everything in my home.
That is fiction. So much like Lisa just said, the actual cash value and replacement cost is a huge differentiator. But then there's also different policy forms that can differentiate the coverage as well as the sublimits on the policy. So with many of the carriers that we represent, they have very generous jewelry and valuables coverage included on a homeowner's policy, but there still are limits. And so there's not only limits for things like jewelry, gold, silverware, fine arts, furs, firearms, but then in addition to that, there's exclusions that can apply or time restrictions for items that are in transit at different locations, or general exclusions that are on most homeowners policies like flood can apply. If you're covering it on a separate valuables policy, the coverage is much more broad, and all of those things continue to broaden. So there's no deductible, like I think Lisa mentioned that before. There's worldwide coverage, and things like flood aren't generally excluded on a separate valuables policy.
Awesome. Thank you, Lee. Moving on to number 4, fact or fiction. Coverage for my personal trust is automatically included in my homeowner's policy.
This is fiction, and this is something we deal with very consistently. So whether it's a revocable, irrevocable trust, LLC, those entities need to be recognized on the policy in order for coverage to apply. Coverage is not automatic. An interesting trend that we're seeing, particularly with a lot of the ultra high net worth families we work with, they are actually moving their art collection into a trust or LLC. It makes it more seamless to transfer the collection to the family members upon their death. So in that case, we'll want to make sure to recognize the entity on the art policy as well. So something that we're always talking to our clients about, making sure that if something has been placed in a trust or LLC, that is being recognized appropriately on the insurance.
Great. Thank you, Lisa. Number 5, all homeowners policies include coverage for mysterious disappearance included.
Fiction. I'm realizing that we have a lot of fictions. So as I mentioned before, there are a lot of exclusions on homeowners policies that will be really specific towards collectibles, collections, valuable items. So we always encourage the separate policy for many reasons, but one, again, it's the broadened coverage that it provides and the covered perils on the home. So while a separate valuables policy in most instances will cover mysterious disappearance, a homeowner's policy will not. So you are at your grandparents' house and you lose a pair of earrings and you didn't have them scheduled. Not only will your deductible apply, and you will have to file that under your homeowner's policy, but then you're also going to be subject to the limits on that homeowner's policy. If you have those those earrings scheduled on your separate valuables collections policy, then it will pay out without deductible, with no exclusions, and to the limit that's listed on the policy, and then more if it has appreciated in value.
That is great to know. We are halfway through, and I think I'm probably doing 50-50 on fact or fiction. So let's go on to number 6. My personal property coverage is worldwide, fact or fiction?
Maybe. It really depends on the policy contract wording. I would say that this is something you want to make sure of before it's too late. We have clients who travel all over the world acquiring things. They want to be assured that they are covered wherever they may be in the world. We had a client to her credit, loaned some pieces to an art museum overseas, kind of sight unseen, which we would never certainly recommend. And the pieces that she loaned had extensive mold and moisture damage due to some kind of less than ideal conditions at that museum. So always want to make sure that the coverage is worldwide. We had another instance where a client was shipping some antique Mexican pottery from her residence in Mexico up to New York, and she decided to use UPS, which we would never recommend. And we will talk about best practices with shipping going forward in the presentation. But as you can probably predict, those pieces that were not seized at the border were extremely damaged in transit. So again, that worldwide coverage is so important wherever you and your stuff may be in the world.
That's a really important point, Lisa, because we have so many world travelers who are also members of Artifacts and of course love to collect stuff on their travels. So I'm thrilled to hear that's a maybe, but do your homework.
Exactly.
Number 7, fact or fiction. Coverage for my personal property includes water damage, hurricane, and flood.
It depends. So on a homeowner's policy, like we've said, the past couple answers, it's always going to be dependent on the policy itself. But most policies, they include certain limits for water damage. And then some policies, depending on the location of the policy, can exclude hurricane coverage. Almost all homeowners policies exclude flood. So again, if you want your pieces covered correctly, your valuable and collectible items covered correctly, you should have that scheduled on a separate policy.
Thank you, Lee. All right, number 8, fact or fiction. There is no deductible for losses to my personal property.
That is fiction. As we said, any loss that you're claiming under the homeowner's policy will be subject to the deductible on that policy, whether it's $2,500 or $25,000. Again, one of the many advantages of insuring valuable items under a specialized policy is that there is no deductible which will apply, so you will have coverage from that first dollar.
Excellent. Thank you, Lisa. All right, second to last. Fact or fiction, filing a claim for my personal property will not impact my homeowner's premium.
That is fiction. So if you're filing a claim under your homeowner's policy, that is going to impact your future homeowner's rates. So even if it is limited to silverware or collectible items that you're filing that claim for, that impacts your annual rate. And then it can impact that anywhere from 3 to 5 years. It's state dependent, contract and carrier dependent. So the benefits of having a collections policy is that it isolates that policy line and it maintains a separate coverage, the separate coverage limit, but it also isolates the claims from impacting your homeowner's premium. So filing a claim for your personal property that you have scheduled on a valuables policy will isolate those claim situations and prevent it from impacting your future homeowner's rates. This can be really beneficial for a majority of reasons, but from what we've seen in our experience, the claims that we've seen on the valuables side have a much less dramatic impact on the rates than they do on the homeowner side. So we always recommend to have that separate valuables line, not only for the claims situation, the extra coverage, and then in most instances, it provides a package credit that can decrease the total cost of your premium, your insurance premiums year over year.
That's great to know, Lee. Thank you. All right, last question, folks. Fact or fiction, mysterious disappearance coverage is included on valuables policies.
That is fact. That is an advantage of the valuables policy, is that it does include mysterious disappearance. And that's probably one of the more common causes of loss that we see, particularly with jewelry, which I imagine is not surprising. And I'll talk about an interesting claim example that we had. And, you know, one of the trends we're seeing is I think we're out of COVID. COVID's over. For a couple of years, no one was wearing their jewelry. We didn't have our diamonds on. We weren't, going to wear our jewels around the house. So now that people are starting to wear their jewelry again, they're not as careful as perhaps they were previously, or they've forgotten best practices around how to keep their jewelry safe. So we've had everything from someone taking off a pair of diamond earrings and leaving them next to the resort pool, and shocked that they go missing. So again, huge advantage of the valuables policy is to make sure you have that mysterious disappearance coverage.
Excellent. Thank you so much, Lisa. I'm going to pop into chat one of my artifacts. I had my own case of disappearing earrings not too long ago. And it's a really funny story because we had homeowners policy and not a separate valuables policy. We opted not to file a claim because the deductible and the cost just wasn't worth it. But the story had a very sweet ending as my dear husband worked with the jeweler to replicate the missing earring.
Oh, that's fabulous.
I love that. I don't love it.
Had a valuables
Didn't have
policy.
the coverage there.
Yeah. We didn't hear that part.
Yeah.
Okay, so this is a curated selection of all of Lisa's most famous claim and loss stories here on one slide. So the first is what I like to call the Great Rolex Caper. This was an actual claim that we adjudicated last year. A client of ours had recently moved, so she had all kinds of vendors and workers in and out of her house. The Peloton people were there to set up the Peloton, for example. A couple days later, she realizes that one of her Rolex watches has gone missing, very valuable wristwatch, around $26,000. So she filed a claim. We submitted that with the insurance carrier. She received a claim payment for the full value of the watch from the carrier. Several weeks went by, and she was scrolling through social media, either Facebook or Instagram, and she sees a picture of a friend modeling a watch which looks strikingly similar to that which went missing. So she confronted the friend and said, send me a picture of the serial number to prove this is not my watch, or I'm going to call the police. So long story short, it ended up being our client's wristwatch. The friend returned it, now ex-friend, I should say, returned the watch. We had it fully inspected to make sure there was no damage or diminution in value. And in this case, she returned the claim payment to the insurance carrier, and the claim was closed out as zero paid. And I actually think that was a great question in the chat around what happens if you find an item after a claim has been paid, and it actually happens all the time. So it's something that we see quite a bit, but that was kind of an interesting crime element to that example. My second favorite story, and I'm still amazed that we managed to find this picture at the top because it's so perfect for what happened. This was during the Woolsey wildfire in California in the fall of 2018. Our client was among the 300,000 or so households under mandatory evacuation. And as you can imagine, at the time, it was very stressful for the family trying to gather up as many of their personal belongings as they could take with them before they left. And right before leaving, our client faced a dilemma of what to do with his wine collection, which has been carefully curated over many years, valued well into the millions. So he did what any quick thinking lad would do, and he submerged every single bottle into the family swimming pool. So the good news is the wine survived the fire. However, predictably, the water and the chlorine dissolved the labels, which rendered the collection essentially worthless. Fortunately, it was fully insured. So the client received a claim payment up to the full value of the wine collection. And he also got to keep the wine as a bit of cherished salvage, as it were. So a bit of a wine roulette whenever they open a bottle of wine in that household. So
I would
interesting.
love to be a guest at that table.
We don't know if it's a $10,000 bottle or a $100 bottle. It's just, you don't know. This is a very infamous story. Back in 2006, Stephen Cohen, who owned the hedge fund SAC Capital at that time, had agreed to purchase the famous Picasso painting La Rêve, which was a portrait of Picasso's mistress, from Steve Wynn, who was the casino magnate, for $139 million. So as Steve Wynn was saying goodbye to the painting the night before the sale, he famously whacked it with his elbow, which left a silver dollar size hole in the canvas and completely scuttled the deal. So it turns out he suffers from an eye condition which affects his peripheral vision and being in time and space. So maybe don't stand that close to a $139 million painting if that's the case. So he ultimately decided to keep the painting and have it restored, and 7 years later sold it for $155 million. And lastly, this was a recent story. I'm not sure if anyone out there saw the Italian artist Maurizio Catalan's installation Comedian, which is quite literally a banana taped to the wall. This was at a Seoul museum. A South Korean college group was going through the museum, and one of the young men was looking at the exhibit and realized, gosh, I forgot to eat breakfast this morning and I'm pretty hungry. So he proceeded to pluck the banana off the wall and ate it. The gallery personnel quickly intervened, but this particular exhibit goes for around $120,000. So we like to say it was one of the most expensive breakfasts in history, certainly in the history of the art world.
Hey, Lisa, I'm going to jump in with a question that we've gotten before we go on to the next slide.
Of course.
It is there a valuables level where it makes sense to actually get coverage? For instance, if you pay in over many years, is there a break-even point where you would benefit from the coverage versus being self-insured from some perspective?
That's a tremendous question. And I would say there's a lot of nuances and variables to that. We have clients who have a list of items that they insure that is 30 pages long. They have everything down to the silver spoon tea set listed. We have other clients that are more risk tolerant, and they are going to only insure everything $50,000 in value or higher. So I think it's a negotiation or a discussion with your insurance broker as to what makes sense. And it all comes down to, from an administrative standpoint, do you really want to have to keep track of every silver spoon and cup and things of that nature? So it's a pretty nuanced answer, I would say.
Yeah, and I think in addition to that, it's a personal choice too, because it's much like a homeowner's deductible. What is your risk tolerance, like Lisa mentioned? So if you're willing to take on the risk of the first 50,000 and then want to insure only the higher valued items in your collection, that will be less expensive. But then many of the carriers that we work with can provide really generous credits when you choose to insure more. So the overall cost to insure actually decreases the more that you increase your coverage.
And it can be based on sentimental value as well. Someone might have some items that are more expensive that they really don't care about, but then maybe it's a gift from a relative or a grandparent that is very important to them and near to dear, and they would definitely want to have that covered in the event of a loss.
Those are all really good points. Thank you so much, both of you.
So I'm going to jump into a case study here, and we're going to show two parts. So this was one claim, and it was how both the homeowner's side paid out as well as the collection side of the policy. So going through the homeowners, obviously you've heard me saying it over and over again, I always recommend a separate policy. It's really inexpensive to cover collections on a separate policy based on the coverage that it provides. So that's always the best practice. But with most of the carriers that we represent, they also provide generous coverage limits within the homeowner's policy that can be a bit of a buffer or additional coverage when you pair it together. So this total claim was just under $320,000. It was a theft of jewelry. The thief broke into our client's home. They did a bit of damage to the doors. They think it was an inside job. They knew exactly where to go. There was an in-home safe, but it wasn't a secured UL rated safe that was bolted to the wall. It was a pretty basic safe that was built into the client's drawer. So they were easily able to access it, and they stole quite a bit of her jewelry collection. So this shows how the total homeowners coverage and how it applied. So there was $320,000 stolen. Just over 100,000 of that that was not included in her jewelry policy. So the homeowner's policy was able to be activated for some additional coverage. So they received $50,000 in jewelry coverage on the homeowner's policy. And then they had loss mitigation measures that were also provided by the homeowner's policy that gave them a $2,500 reimbursement for the installation of a safe. So the purchase of the safe as well as the installation. It didn't cover both, but it was certainly generous to have that additional $2,500 amount. And then, of course, the repairs from the theft itself. In most instances, a deductible would apply, but many of the carriers that we represent have what's called a deductible waiver. This was one of those instances. So their deductible was waived because the loss was over $50,000. So from the homeowner's policy, this is the total amount paid, that $57,478. So they still received something, but when you look at the total cost of what was stolen, it was still quite a big discrepancy. So fortunately, they did have a collections policy, and that did cover some of the additional items that were stolen. So they had a total of 36 items that were stolen. 15 items were included on that schedule. And then there were 21 items that were not included. This was just an instance where she hadn't continued to update. She had a small blanket. So a blanket on your collections provides a broad and general. You don't have a broad and general coverage for anything, either jewelry or fine arts, but there tends to be a limit to that. So you have to choose one limit, and there can be a per item limit. In this instance, she exhausted the total amount, which was that $26,250. So she did receive quite a bit of reimbursement, but obviously there were some unfortunate gaps. The fortunate part was that she had both her home and her collections policy with the same carrier, and they complemented each other, and we were able to advocate for her and activate some additional coverages that helped her recoup some of the damages from this loss.
All right, so I will bring us home here with some industry best practices. So insurance is really a backstop when it comes to protecting your valuable items. There are certainly some things you can do to better protect those cherished items. So hopefully over the past 39 minutes or so, we've imparted on you the need for the right insurance. So I'm not going to harp on that point. Documentation. Many people don't realize, and I think our homeowner in the claims case study that Lee reviewed realized this the hard way, that the onus is actually on you as the homeowner or claimant to prove and document what you have if an item is lost or stolen or damaged and you are making a claim. So I know very few of us, probably myself included, I don't keep a detailed inventory of my personal property. I have a really good idea of what's in my closet, including my shoes, but I have no idea what's in our garage, for example. So, and this is where Artifacts is so important for that documentation component, so that in the event there is a claim, there is a kind of living, breathing documentation of those items. So in terms of other best practices that we recommend, and this really, much of this is common sense, but want to mention it nonetheless. So transportation is huge. I touched on this briefly. So the majority of claims to fine art that we see are during the transportation and installation process. So number one, always hire reputable companies to transport these items. Again, UPS, FedEx, they have their time and place, not recommended for moving items of extreme value. Also recommend having these items inspected before they're removed and then after, to make sure there's been no damage in the transit process. Also using kind of museum quality storage crates for any art items of value is always recommended. We've heard, myriad stories of art being moved in places like New York City, where they basically just throw it in the back of a van and hope for the best. Even when you're only going a few blocks, bad things can certainly happen. For items, for collections that are very valuable that are being transported, we would always recommend vehicles with a security system, or at least 2 drivers and security personnel in the vehicle at all times. Storage and location, this is so important. So we always want to recommend keep those valuables away from any bathrooms, any HVAC vents, sprinkler heads, anything with water. Keep them away. Don't keep anything of value in the basement. Lee and I see way too many water damage claims in the basement all the time. Something that we talk to our clients about constantly is installing a water shutoff system, which essentially will automatically shut off the water supply to your house if a leak is detected. So water damage claims are still the #1 cause of loss for all homeowners. So we see that every day in what we do. So another kind of best practices. And keep it in one piece. A lot of our clients will, hang a painting or display a statue and not think about it again. But the reality is this hardware, these materials break down over time. So they should be professionally installed, checked constantly in a regular kind of cadence to make sure they're still adequate for those pieces. And lastly, on a limited basis, explain to everyone in the household if something is of value. So we've seen instances where a housekeeper wasn't aware that a large canvas was of value, and she continued to run the vacuum cleaner against it repeatedly, which led to damage. So you always want to be careful to avoid an inside type of job like Lee described, but definitely making sure anyone that's going to come in contact with these pieces is aware they are important is also an important best practice.
Yeah, and I think with that too, many of the carriers that we represent can also provide risk management recommendations and consultations based on the size of the collection. And if it's too big for them, they know the experts in those individual fields. There's so many people, while it looks really beautiful to hang a painting above a fireplace, it's not really the ideal place for one unless there's been some other mitigation efforts put in place so that the heat isn't going to impact that. It's not at risk of smoke or other damage. Or even other ones that we've seen a lot are direct sunlight on photographs at expensive photography collections. That can obviously wear out the photograph over time. So there's all of these factors that, while it might look nice within your home, if you take that extra step and have work with your carrier to have a risk manager come and do a risk assessment, and they can do evacuation plans if they're in a place like Florida that has hurricane risk exposure, all of those things can contribute to safer and best practices for those items.
That's such a great point. And to kind of piggyback off of that, something else we continue to see regularly are clients that are renovating their homes, doing either large scale renovations or smaller scale, and they often don't realize that presents a risk to their valuable items as well. I mean, even if they're not doing anything major, there could be dust involved. We've seen cases where even if there's renovation at an adjacent property or condo, for example, there can be vibration or other kinds of loss to our clients' collections as a result of that. So if you are thinking about doing any type of renovation work at your home, definitely something to think about as well.
And statistically, the losses tend to happen in the last 10% of the project. And they're very large losses. Obviously, when you get to the end of some of these larger scale projects, we've seen some pretty catastrophic losses, and the home has been just about to get that certificate of occupancy, and then it has a huge fire or something else that happens that impacts and takes it back to square one, or sometimes even worse, unfortunately.
Heartbreaking. Client building their $4 million dream home and then yeah.
Thank you both. We do have one question relating to, I think, that last point Lee just touched on with best practices. The question is, what is the best practice for how often you should update your insurance policies? Are there any trigger events that should be an immediate, like I did X, I need to now call my insurance agent and do Y? Or is there, if you do a spring cleaning, is that the time to update your policy?
Sure. So any major life change events always triggers a conversation. You can always review it annually. We have a best practice where we are reviewing our clients' policies on a regular basis to ensure they're up to date. But things like if you're updating to add a trust, or if you have a major purchase, whether that's fine art, jewelry addition, there's always a buffer that you can provide yourself, so you can issue a separate valuables policy, but then you could also include a blanket coverage, which I touched on a little bit, which is just a limit, a set limit, and it doesn't explicitly list what item it is, and it just provides a broad coverage up to a certain amount. So you can do a $25,000 limit, you could do 100,000. So in the event you purchase something and you're overseas, that you have that immediate coverage, and you don't have to wait until you make contact with your insurance agent to make sure it's covered. There are some carriers that do provide automatic coverage based on the coverage limits that you have, but again, that's always going to be contract specific. So just in general, any major life change events, larger purchases, anything that is new or of value to you personally, like Lisa mentioned before, if it's specifically a family heirloom, something you think may have more personal value and you would be really sad if you lost it, it definitely might be in your best interest to add that to a separate collections policy.
And we've got a follow on to that question.
Great.
As you're updating your policy, what type of documentation should you include or should you keep? And how long should you keep it for?
That is a good question. So it's, and again, we use the experts. We have a network of really wonderful appraisers that work in very specific fields that can give you a better best practice when it's specific to something like modern art versus jewelry. But just in general, updating lists and items and making sure that they're current every year annually. In terms of appraisal work, that's supporting that every I would say 3 to 5 years is what most of our insurance carriers are recommending. But again, that really just depends on the type of collection that you have. If you are very into modern art, that can escalate really quickly, and you could be really off kilter with the values very quickly. So you should assess that pretty regularly, versus some of the old master work is kind of staying a little bit, it is a little bit more solid in what the values are, and it's not going to change as rapidly as some of the other artists that we see.
Thank you, Lee. We've got another question. This one is, most of my items will be under $50,000, but I'm not certain about valuations. Short of appraisals, how should I approach this? Some pieces are from foreign countries, some artwork from deceased artists that are not well known, etc.
That's a great question. I would say in that case, as close as you can approximate to what the item is would be helpful. Google is a great tool. Many times we run into this all the time. Our clients have a piece of art or a piece of jewelry that are no longer available. If you can find something comparable to provide documentation for, that would be most useful.
I'm also going to jump in there and respond a little bit on the Artifact side for this too. So we do have, when you are a paid member of Artifacts, we have the ability to request a free valuation from our partner Heritage Auctions based in Dallas, Texas. So it's not the same thing as an appraisal, but it can at least give you that ballpark. If you're curious, has this item appreciated to say $10,000, or is it still worth the $1,000 I bought it back 20 years ago? That could be a starting point for you, Thomas, if you're looking to figure out just what ballpark are you in and where to go from there. But the more details you can provide when you fill out when you create the artifact, that will give Heritage Auctions a better ability to give you that valuation, at least as a starting point. And then you can decide, do you want or need to have the appraisal for insurance purposes? What do you then need to do on the insurance side to make sure the item is protected?
I think too, when you're thinking about appraisal work, a lot of people think that it can get really quick, really expensive very quickly. And that can be the case. But when you are appraising and working with a generalist appraiser, they can provide you with a layout of all the options. So you don't have to have an appraisal for everything. And you could just pick and choose the higher valued items, or the ones that are more valuable to you, or the ones that you have absolutely no idea what they are worth, just to get a base point of what that value is. And I would encourage you to review the cost and the pricing for that, because in general, I'm always surprised at based on the work that I see and the appraisals that we receive, and I know the hours of work that go into the appraisals and the descriptions of the items, and why they determine that value. To me, it seems like a really great deal, because someone is doing all of that legwork for you.
Thank you, Lee. We've got another question. What if we can't substantiate the estimated value we place on an item? Will the insurance company push back at the time of scheduling it, or when we try to do a claim? You might have mentioned this, but what about the goodwill value based on the family value, the heart value, etc.?
So, good question. I would say that sentimental value or family value is not necessarily something that can be insured. So we're strictly looking at the cost to replace an item in like kind in today's dollar from an insurance standpoint. So we've had plenty of instances where an insured has lost a cherished bracelet that was a gift from a deceased spouse, etc. Obviously, that's worth much more to her than the $2,000 that the bracelet cost. So it's a good question in terms of the company pushing back. Typically, when we're scheduling items, as Lee mentioned, usually anything under $100,000, we would not receive a pushback. We, of course, evaluate everything to make sure that it's reasonable from a cost standpoint. And then at the time of a claim, it would just be a matter of finding something comparable. So we have clients that will go back to their original jeweler and ask them for evaluation of the item in today's dollars, or even just Google to find something comparable in terms of, say, carat weight or metal, things of that nature.
And you guys have mentioned a lot about jewelry and some of the great case studies too. What are some of those details that are really important when you're thinking about scheduling an item like jewelry? What do you need to know going into the process?
I would say be as specific as we possibly can. We have plenty of clients that have a jewelry schedule which reads 1 gold bracelet, for example. So if we could be a little bit more specific in terms of, what is the metal that it's comprised of, the total carat weight, is it diamond, is it emerald? I would say the more specific we can be in terms of the description, the better. That being said, we don't have to drill down to a whole paragraph worth of description, but just something, enough detail about the item that it can be found, a replacement can be found.
And I think too, this is where an app like Artifact can come into play. If you have proof of that item and you have it documented at the time of the claim, these valuables claims, most of the ones that the collections claims that we manage, they pay out within 24 hours. It is one of the fastest claims. There's little to no investigation, especially for scheduled items. They are saying, here's the item. This is what the loss was. They have a conversation with the insured. Sometimes they want to see a copy of the appraisal, which we will typically keep on file. Sometimes they want to see the receipt. Most of the time they just pay it out, and it is a really quick and easy process. But any type of documentation that you have makes that even more seamless. I've seen it closed out in less than 24 hours, which it seems pretty remarkable. It was a wire transfer. We filed in the morning and there was a claim payoff by the end of the day. I wouldn't say that is very typical, but I would say around 48 hours turnaround time, depending on the circumstances surrounding the claim.
Wow, even 48 hours seems incredibly fast for me. I'm truly surprised by that, but that's great to hear. I have learned so much tonight. Thank you both, Lisa and Lee. Are there any final questions before we close out tonight's session? Oh, we do have another question. Do you actually have to buy an item again as part of a claim reimbursement, or will the claim be paid out at equivalent value based on the research? I may have something artifacted and it also had monetary value, but I don't really want the same thing again, and maybe I'd use the money to buy something totally different.
A great question. And no, you are not obligated to buy the same item. The point of the insurance contract is to make you whole from a financial standpoint, to reimburse you for that financial loss. If you choose not to buy the same item, that's perfectly fine. You're not going to need to prove to the insurance company that you bought the same pair of earrings, for example. But that's a good question.
It's great to know. Any other final questions before we sign off for the evening? Yeah. All right, well, Lisa and Lee, thank you so much for joining us tonight and for the delightful presentation in fact or fiction. I'm ashamed to admit, I think I really did get 50-50 on the fact or fiction. So
That's good.
I've got some homework and definitely some learning to do, but I do appreciate that. And I'm going to be checking my own schedules this weekend, that's for sure. So thank you both for your time tonight. It was a delightful conversation. We also want to let folks know that we do have coming up this fall, we'll be featuring a conversation with a company that specializes in moving high-end collections, artwork, special objects, you name it. Definitely not UPS or your generic FedEx, but someone that does very much specialize in those specialty moves. So we'll be featuring that later this fall when we kick off Evenings with Artifacts again this fall. We also want to, again, thank you all for joining us. We will have the recording up on our YouTube channel later tomorrow afternoon. It's been a long day and I'm tomorrow we'll have the recording up. And as always, you can find additional resources. The link to Howard Insurance will be with the recording as well if you didn't catch it in the beginning. And we do wanted to say, if you're still thinking about what to get your mom or a mom in your life, a Mother's Day present, Artifacts makes a great present, a great way to spend quality time and capture the stories and the memories and her histories with her. And the best part is there are no shipping costs or delays. So with that, we will say thank you again, Lisa and Lee, for your time and your knowledge tonight and sharing it with us. It was a great presentation. And thank you all for joining us tonight in our final series of Evenings with Artifacts this spring. We look forward to seeing you all again in the fall as we kick off the series. Thank you so much and have a nice night.
Thank you.
Bye.